So you said you had a cousin who had a farmer's agency. You kind of saw that. You said, hey, look, here's another opportunity. Um, how so when you decided that you were going to make that shift from that space, and I think it's interesting how you said, you know, you might wake up in the middle of the night. There's always, different ideas going off, different things that are happening, and the way that you position the business, saying, hey, look, we're a sales and marketing company, and basically the product or the solution that we provide, that's it. That's kind of the call to action. So was that your thought with insurance as well? You said, hey, look, it's about creating the awareness, creating and crafting the message, and then the call to action is making sure you're protected.
Yes, and I started off actually in the health, a space, selling Obamacare, and I did really well, with it, and it started to give me more ideas. I started thinking more and more about how I could sell life insurance. We did sell supplemental insurance or gap insurance with the health insurance, but I started to think about how I could sell more life insurance. And so I got involved with the company, and it was lucky because a few years back we were digital already, and so when COVID came in, we were established that way, so it actually increased our business. And then lucky enough to learn about the technology, which is part of our solution. And, and that was kind of a lucky, just one of those things, you're keeping your eyes open, are you looking for opportunities? And, and actually the technology took me away from the life insurance sales for a short time, because it was really fascinating. Yeah. But then to really figure out, especially with the changes in the IRS code, the 7702 and the 101A, allowing us to do what we're doing with the combination of the two, now I'm back to, to both of them, and I'm really thinking of ways to use it, and, places. And so how I go to market really and truthfully is I'm thinking of ways that we can use the solution to solve common problems for people.
Yeah. No. Right. So let's talk about that, because you mentioned some terms in there, and we got to educate. We got to educate the people on this. All right. So, and you're right. You're spot on. Like you've had these rich experiences, marketing, technology, financial services, bringing them all together, and now what you're doing incorporates the technology and the financial services. Let's unpack that a bit. So started in the industry with Obamacare is Affordable Care Act. For those listening, it's same thing. If somebody says Affordable Care Act, Obamacare, same thing. Right. That's the government provided insurance that can be subsidized depending on income and living situations. But from there, you branched off into the life arena. Then you got into the technology. Let's talk about that, because even when you talked about your market segmentation early on, you mentioned providing solutions, right? You mentioned financial education and literacy and generational wealth. But let's talk specifically about how you're doing that, because how you're doing it is actually pretty cool. So tell me about the technology solution that you're using now, and how you built this company, bridging that with your insurance expertise as well.
So I started the technology part of it, of course, is the core, because what it gives an individual to me is immeasurable. So first, I can plug your numbers into this technology, which is driven by a mathematical algorithm, and it will calculate the fastest mathematical path for you to get to zero debt, right? Doesn't matter what kind of debt you have. It can be, secured debt or unsecured debt. It is just like the Terminator, and it will use, and it will do this without changing your budget or your lifestyle. So it's using the money you're not using in your budget, and it has a method of paying down the debt that just speeds it up to, just crazy speeds. I'm talking about paying off a mortgage in 5 years. Okay. And so, when I learned about the tech, so I started off in the insurance first, and I started building the solutions based on an insurance, because that's just the way my mind works. It's not just to go to market with the product itself, but what supports it. What is a co-op? And I'm thinking in that way where maybe I can end up doing a co-op with that partner or whatever. So I started thinking financial wellness. And when I learned about the debt technology, and so when in building this financial wellness ecosystem, it started off with insurance related products, and then it grew to more, I guess you could say, credit or debt solutions. And so the technology fit right into what I was doing, because we had already created, because we had the insurance, we were digital. We had created a financial literacy program that is online, so people could take it at their own pace. And content, we have just literally professionally written content that just tons of it. And then the technology fit in because it actually makes people more financially literate. It is a bridge into thinking a different way. And one of the hardest things, I think, is when you get people involved in the technology, is that they've been paying their debt and operating a certain way all of their lives. Now they have this technology that's telling them to do things in a totally different way, some things that they would not even do. And now it puts everything right in front of them. It shows them the repercussions for every financial decision they make. It works like a bookkeeper. It shows them the money they're wasting. They can see the true cost of things. They know, because they can measure whether they're using credit in this situation, or writing or paying check, or if you can do it, because the system is keeping track of your cash flow and your money. And so it puts you on a totally different place. The report that we generate from it gives that person an analysis on their debt, their cash flow, how much money they're spending on interest, how much they're spending per dollar of premium they pay. I mean, it just breaks it down to to an incredible amount of information for them, and it's there. And then as they start the process of getting out of debt or paying off a mortgage, it shows them exactly where they are. It's displaying how much interest they just saved, how much more principal they have to pay, when they're going to be debt free. And every move, it continues to show that. So if they make a transaction after that, right, it will still pay down the new transactions, the new debt. And so they can forecast, they can see what's possible. And when I demo the solution, I showed them how they can buy 3 houses: 1 they're living in, 2 they're renting out, and have them all paid off in 16 years, right, and save $400,000 in interest. So it is. And the thing about it is, it's because there are people out there that say they have debt tools and so on and so forth, but nothing like that. There's nothing like this out there. It is just one of those kinds of tools that is irreplaceable. It's not like guessing to pay down your debt or anything like that. And then the coupling of it, because it uses an offset account. So in the beginning, it used a home equity line of credit as what we call the offset account, because the algorithm was written to use that kind of debt, right? Because it was readily available in the early 2000s. And so it manipulated an open-end line of credit to defeat a closed-end loan. And so now what we're doing is, over the last 17 years, first of all, we started using different types of offset accounts, from checking accounts to savings accounts to PayPal. And then we, of course, entered the asset-based life insurance after the change in the laws in the CARES Act in 2020, at the end of 2020, which allowed people to put more money into their life insurance policy. And so now, with the technology guiding them step by step like a GPS, and substituting the offset account or savings, say it was a savings account, with the life insurance policy, allows them to take that money in a compressed period of time and take their debt, what they're going to be paying off, put it into the life insurance policy, and then borrow it out. So the life insurance policy is not normal. It is also liquid. So it has the same characteristics as a line of credit.
Yeah.
And it allows them to put the money into the life insurance policy, borrow against it, and turn their debt into income and wealth.
See, now this is the fascinating piece here, because what you're doing is you are not leveraging the life insurance policy for what most people would think of it as, and that's a death benefit. You're utilizing it as an income building tool.
That's right.
That's right. I think that is really that's really where the innovation comes in, and we do talk about, when we think about life insurance, we do talk about the fact that, hey, you have cash value building policies. You can, borrow against those policies, or you can fund those policies to the point where they're paying out distributions and they can be tax-free income. We talk about those things for those who work in the life insurance space, but to use it in conjunction with this software that eliminates the debt and allows you to, essentially what you're doing is you're using your life insurance policy to pay down your mortgage and absorb all of the debt that you would have as well. Is that about right?
That's right. Yeah. You're becoming your own bank. So you end up making the interest that the bank would be making on you, because you're now your own bank. So, that's exactly what it is. And so, you've been around, this is not, infinite banking and those kinds of things are not new. So this kind of turns infinite banking on its head, because as we know, with an infinite banking, they're using whole life policies, and the insured is funding it with his premium payments over 25, 30 years here. And the goal, like you said, with that infinite banking, is to have a very large death benefit, to have a big death benefit. So they can borrow from the money. That's why it's called banking, but they want them to pay the loan back, right? So they buy a car, they borrow money, and then they pay it back so that the money is there for the death benefit, where we're, first of all, funding the policy with their debt, and the technology is instructing someone to overfund their policy in as little as 5 years. So that money is in the policy in a very fast amount of time. So we're condensing the funding of the policy. And then, because of the way it's structured, the policy is liquid. It's indexing. They're making the spread on 4% and the index amount. And so the way it works is they end up borrowing from the cash value in their policy for the rest of their lives, and they never pay the loan back. And because it's a loan, there's no interest on the money that they borrow out. Right. So if you're in your 20s, you can count on being a millionaire, right? I mean, if you're, in your 30s, you're most likely, right? If the sooner you start, and one of the great things about this is it is bringing us a younger clientele, right? Who may think life insurance alone, right, is they're young,
not so cool,
right?
Cool, what I mean? About it, right?
But to do it to make money, right? They're open to that. So yeah, absolutely. Yeah.
No, it's like I said, it's just a new method of communication, which once again is your specialty. You know, come being in marketing, having that background, it's like, hey, how do you communicate it to the audience that's gonna be able to benefit from it the most, right? And
Yeah,
it
that's
sounds
right.
like really, you know, these are solutions that anyone could benefit from. You know, as we talk on this platform, we talk about, you know, how to leverage, you know, the career opportunity. So this is, you know, so not only for a younger person as a client, but it's a great opportunity for a younger person to not only participate, or really anyone to participate, but also to get more financially savvy in the process, be in control of their finances in the process, and also, you know, really get educated on how, you know, these insurance policies work as well, because, you know, you have different types of as you mentioned infinite banking. You have the
Yeah,
whole life, which is
that's right.
kind of that set premium, set interest rate,
Yes,
typically a little bit more pricey
that's
on
right.
the front end. Then you have the universal life, which is which works like the whole life, is designed to be permanent, give you kind of a set
Yes,
premium, but a little bit more flexibility
that's right.
pricing wise, you know, maybe even a
That's right.
little bit more flexibility from an interest standpoint
Yes.
as well.